All right. Welcome, everybody. Kimberly, my favorite subscriber. And hey, everybody. Is this the right place? It's the right time. Right place? I don't know. Are you here for me or are you here for something else? um, I don't know how to answer if it's the right place. Are these the droids you're looking for? Welcome, everybody, to the show. I am out of sorts this morning. I'm sorry. Let me just give me a second to ground myself. I don't do well with going off schedule. Let's just put it that way. So and of course, updates happen while I was gone. Yeah, hey, don't use your computer for a minute and all sorts of everything changes. Beautiful. Beautiful, beautiful. All right, cool. I need to click the button. So I planned on talking about jobs. The jobs stuff came out yesterday. It was kind of weird. We were expecting I guess widely published through mainstream media. We were expecting a major job revision, like the revision in the past. We're expecting revision down, losing million, 2 million, something like that, and that was widely expected, and then that was going to push the unemployment rate kind of crazy, and kind of like the theory was that we were going to support like 3 more rate cuts, but then they had a surprise job increase, but they did the revision too, so it was like this whole chaotic thing. So let's kind of break down the statistical bullshit that's going on from the government. So, morning, my monsters, and welcome back to the show. Probably the only show that helps you navigate the absolute circus of financial world with some clear-cut examples and talk. So I was talking to my buddy Dave the other day. Dave's a relatively smart guy, runs his own business, but he's got this look on his face like he's trying to solve a Rubik's Cube that's pretty much on fire. And he tells me, man, I just don't get it. The news tells me the economy's booming, but my gut tells me something's off. And, well, everybody, I got to tell you, Dave's gut, it's onto something. Because this week, we got this jobs report. And on the surface, blockbuster, real Hollywood production. The headlines are screaming, U.S. unexpectedly adds 130,000 jobs. The most since September 24. The unemployment rate just kind of casually dropping to 4.3. Wages up. Beautiful day in the neighborhood, right? Well, time to break out the champagne and go book that yacht. You've been eyeing, put the down payment on it. But is it really? Because when you look past the glitter and the pyrotechnics of the numbers, you start to see the cracks in the facade. You see the government jobs report is a bit like a magic trick. Pulling the rabbit out of the hat. A really, really good one at that. They show you this big, beautiful number. Everybody oohs and ahs and, oh man, everything is great. But what they don't tell you, what you don't see happening, is all behind the curtains. Let's talk about the magic word of the day. What they used to add all these jobs was seasonal adjustments. Sounds boring. It's in every report, right? I know. Stick with me a second. The unadjusted number, the raw data before they worked their statistical magic, it wasn't a gain of 130,000 jobs. It was actually a loss of 2.6 million jobs. And maybe that's why the market did what it did yesterday. You heard me right. 2.6 million jobs lost. Magically, through the seasonal adjustment and the beauty of statistics, turned into 130,000 job gain. It's kind of like turning a rusty old pickup truck into a brand new Ferrari with nothing but a spreadsheet and a little bit of wishful thinking. I mean, But wait, there's more. The real kicker here, the part that should make every trader, every investor sit up and pay attention, is the revisions. It turns out the government has a bit of a habit of, shall we say, overestimating its own performance and this economy's strength. 25 out of the last 26 job reports have been revised down, lower. That's not a rounding error. That's a pattern. And these small revisions aren't actually small revisions at all. They just casually revised the entire year of 2025. Remember how they told us, we did a very respectable 49,000 jobs a month all year long average? Well, just recalculating that number just a little bit, it faded all the way down to 15,000 jobs. They basically wiped out 898,000 jobs through a little statistical magic. It's the financial equivalent of a Jedi mind trick right here. These are not the jobs you're looking for. So what's really going on here? I mean, where are the jobs disappearing? Well, big part of the story is the government itself. The Trump administration's been on a mission to shrink the federal workforce. They're doing it. They've created a new department. If you haven't heard of it yet, the Department of Government Efficiency, DOGE. I mean, our buddy Elon kind of talked about this. And let me tell you, DOGE has been busy. They shed over 327,000 federal jobs since October of 24. That's the largest peacetime workforce cut on record. They're calling it tremendous. In the words of somebody famous we all know. I call it a great way to make the numbers look good, while a whole lot of people are suddenly looking for work. Now, for the part you've been waiting for, dun, 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 the part where this economic downturn clown show thing turns into cold hard cash. Because even in the midst of all this statistical shenanigans, the numbers are all made up. I say that all the time. There's opportunities. So first, let's look at where the jobs actually are being created. The two shining stores, the two bright shining beacons of hope, healthcare and construction. Healthcare added a whopping 82,000 jobs. With an aging population like we have, our boomers, the biggest, I guess, second biggest generation right now. Maybe it's the biggest generation. They're getting old. Plain and simple. Retiring. They need medical care. The oil needs changed. The tires need rotated. They need to have the Roto-Rooter treatment. Companies like United Healthcare, Intuitive Surgical, even big pharma like Merck are positioned and poised to benefit as these people need more medical maintenance. These are the companies providing the services and technology that keep these people alive for now, regardless of what the government's magic numbers say. And then there's construction. We actually added 33,000 jobs. This is driven by a real tangible need for infrastructure. I mean, we're building data centers. We're trying to build some housing. We're building roads. We're building bridges. We're building, stuff that needs big, heavy diesel burning machines like Caterpillar and John Deere. Vulcan Materials, they're a big supplier. VMC, Caterpillar, CAT, John Deere, DE. They provide the raw materials for all of this, and these guys are in a prime position. These are the companies that literally build the future, one construction project at a time. Now, let's talk about the Fed here. With a labor market that's clearly weaker than the headlines suggest, what do you think the Federal Reserve is going to do? Well, probably cut interest rates. It's not a matter of if, but when, especially come May when we get the new Fed chair. And when they do, it's going to be a huge tailwind for certain investments. Lower rates make it cheaper for companies to borrow and expand, which is good for growth stocks. It also makes the yields on bonds more attractive. And for those of you who like a little bit of hedge against uncertainty, what's the one thing that loves a good rate cut. Ah, I got it. Gold. As the dollar weakens, gold shines. It's the original OG store of value. I don't know if there's any other really that. And funny, gold, despite the bubble, seems to actually be somewhat of a store of value. And in a world of funny money and statistical bullshit, looks more and more attractive after we get through with the current pullback. And finally, a little speculative play for the more adventurous among you. What about the Doge effect? With the government cutting back, who's going to pick up that slack? Well, it's private contractors, companies that provide services to the government, from IT to defense to consulting. This is a bit of a little bit trickier play. But if you can identify companies that are winning government contracts, maybe there's like potential, like SAIC, you could be looking at a very profitable niche if the companies can follow through and actually get them and keep the contracts. There's lots of other, lots of government contractors out there. So there you have it. The January jobs reports, a masterclass in how statistics can just be completely turn into some complete monkey do. And I guess sugar honey iced tea is what you might call it. Just complete sugar honey iced tea. But now you know the real story. We actually lost 2.6 million jobs. The real growth is in construction and healthcare. And you know how to position yourself, hopefully, for what potentially might be coming next. But don't be like my friend Dave staring at the headlines and just really confused because you're like, where are my customers and like what's going on? Be a monster of the markets. Look behind the curtain. Find opportunities. Let's talk about some charts. How I think we might be able, what the expectations for today might be, and how we might make some money. Let's jump in and look at it. Dun, 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 dun. So, I guess PSA here. Let's see. Here's my thing going to work. Oh, cool. Love it. All right. Hold on 1 second. My little button doodad, not button doodadding. Got the cool. Software's froze. Love that. Oh man, go do something for a few days, come back, none of your stuff works. Gosh, love it. All right, let's see. Is that the right one? On the wrong side. Let's see. Big, beautiful. All right, Valentine's Day sale. If you don't have TradingView, 3 days, 15 hours, 3.5 days. You got it to lock in there. So, told y'all there'd be some sales. So, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial anything, including even alerts from, don't buy stuff from me. No, it suspended the service. Why would you do that? What? Let's see if it'll restart. There we go. Let's see. Will it actually work? Oh, there we go. Wait. Can you put me on the right side? Can you do it? Can you do it? See if I'll do it. Will you do it? Will you do it? No. Told me what I need to click on though. There we go. All right. So don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money. Let's look at some charts. So ES overnights. Awesome. Not really didn't do anything. I mean, there's the jobs report yesterday, like the little pop and the drop, and look at this. I mean, that's not bullish. And when you look at the bigger picture here, this move down, this retrace, while technically that's kind of that would be bullish indication we're going to break out and go higher. The fact that we've kind of held this downtrend of highs right here has me a little bit on edge here. We don't have much room here. If we keep pushing down, we're probably going to flush it down again. Now, when you look at NQ, the picture is more clear, like I was talking about yesterday. Move down, retrace, holding under the 618. This looks very clear to me that we're about to do this. We're about to do a bigger flush out. There's not much opportunity left to save this. I don't know that I'm going to trade for it, but I would be careful about what's about to happen here. I don't think we're flushing the market down in a giant flush out way, but let's see, NASDAQ hit the daily roadmap line, but we're about to poke through it. And if we go on and look at the 3-day, we might go visit that. It could come cruising on down here. Now, when you look at the S&P, we didn't even visit the daily. That came up shy. So this might need to flush right down here. Right down in there to clean this chart up. Russell grinding on that resistance, that uptrend of lows. If we poke through, that one's set to go to 3,100. If this is big, if we break down below this low right here, we come cruising back down, break down below, that's probably going back down here to the daily roadmap line. So 2,400 on the downside, 3,100 on the upside. That's like a 600-ish point range on something that doesn't typically move that big. So be careful on Russell. IWM is the ETF for that one. This is the S&P 500, if you didn't know, SPX, SPY. And NQ is NASDAQ, like QQQ, INDX, right there. And as far as the expectation for today and where I expect the range to be for SPY and QQQ, hang around to the end. I'll pull up the gamma charts and we'll try to read the tea leaves of the options market and see where I expect price to end up by the end of today. Oil, still hanging with my homies here. We are still in between. Yeah, this can last a while. Like we can just fart around in here for a while. This is this right here, roadmap line, support. This right down here, next level of support. This right here, it's the only resistance that stands between us and a breakout. Well, you also have this downtrend of highs. That's been a long time going. And as long as we kind of stay under that downtrend of highs, downward pressure is still on. This has been a long time standing, as in since back here in 2023. So if we can keep on grinding that downtrend of highs, we still have down pressure. You know, we could poke above, and then every time we've poked above for the last 3 years, we get sucked right back down. I expect a dip down into the 40s, at least to 50, if not into the 40s, before oil's done on the downside. But then we'll probably embark on a rally up to the 100 area. Gold continuing to churn a little bit here. We are at this resistance. We had a move here, And if we actually balance the move, we have, if this is an A, this is a B, and we do a proportional C, it will come up right in this vicinity right here, back to this 5,400, suck more people into gold, and then proceed to rip everybody again. That'll be super awesome, right? Another one of these flush outs, except this one will probably be bigger, more violent. May come down to 4,000. So that's what we got cooking on gold right at the moment. Like, well, we've kind of looked at this pattern before. The last few, last year we saw this kind of shape up where we got a correction, and then what looked like, we would do a bigger three-wave move, but we never got it last year. So we've punted the ball, kicked the can down the road, so to speak, enough times that maybe we've accumulated enough bullishness in the market that we're going to do the bigger pullback here. Just be careful. When we kick the corrections down the road, they get bigger and more violent. Bitcoin. Except, so the problem with that, the gammas to 930, is that they don't matter until about 1030. They don't matter at the market open. It takes about 30 minutes to an hour for it to actually pull in the data to firm up. So if you try to read it early, it doesn't matter. It changes too drastically between the open and about 10 o'clock, 10:30. It starts firming up about 10 o'clock, and then it's more reliable by 10:30. So it's because the amateur hour, basically. Bitcoin has a bounce, a pullback, as long as we hold above the 64,000. I think I was mentioning that yesterday. As long as we hold there, upside. And this will probably be, whatever we do will probably be the A wave right here. We'll probably do an A wave of some sorts. My guess would be back up in this area here. We'll probably do a B wave down in here. And we'll probably do a C wave up in here. And B wave could be shallower. So we'll probably ping pong around. This is kind of what I expect us to do. And this is not time-wise correct. I need to pull this out just a little bit longer. I expect it to be more like this. So may see it go like A, B, C. That's kind of my... Let's get these arrows put in here properly. Now it could go faster than this. It could go slower than this. General direction I kind of expect, and I'm trying to kind of get it lined up with the timeline I expect too. Somewhere May, June, expect us to pop up in that. And it could go a little higher. We could come all the way up to 115,000. So this is where I expect the bounce to kind of take place. And let's tighten up this target here. Don't really expect it to go past July. Could go faster. Could be fatter. I guess it could be maybe as better as a zone. Just a box. Yeah. This is the kind of the zone where I expect Bitcoin to top out on this pop. And we'll put an ideal target in here, right in there. A little tighter. That's the ideal target. The zone is kind of like where we might bounce to. and then we'll probably flush on down into this time frame. Probably in this 30 to 50K zone. Right in there. So that's the path. We're probably going to do this and this. And that's probably going to be Bitcoin for till October. Ether might kind of do the same thing. Dollar still set for a flush out. This will probably push gold and silver higher if we flush on down. Then I'd watch out because this could be the end of the correction on dollar. Like the dollar has been working on this correction since we topped out back in 22. And it's kind of the ideal spot to find a bottom somewhere around this 92 to 94 area. Could go lower low, not likely. And then we're probably going to do a large rally. Probably up in the 130 area. And that's probably going to last a while, like a couple years. That could put, a strong dollar could put down pressure on stocks and commodities and all sorts of stuff. NKD, about to hit that target. Reach for the sky. Let's get that target up there at 60,000, and then that might top out. So, digging through the Mag 7s here. Apple, turning here. We set the entry for 295, but it's stalled out. This could come back to the roadmap line before we pop on up, though. Did trigger the long. This is the trigger. Right there, the close above the 618. The expectation is climb up here. But the flip side of this whole thing, it's not the most reliable pattern. 75%, but the profit factor is negative. So when it fails, it eats up your money. But it does go on at the same rate as pretty much the average for this pattern across tens of thousands of trades. 33, 75 right there. Kicked off the pattern. Target is that 295 area. 75% of the time it works, almost 76, but when it loses, it eats all your money. Beautiful. That's what you like to hear, right? So that this is a cruel mistress of a stock. Amazon, still hunting the lows. I mentioned that we might need to push just a little bit lower. Clean this up just a little bit before we bounce. It's been developing. Google, if we break below this gap area right here, let me draw right here so we see it clearly. If we break below that, not surprise me to hit the roadmap line here, and that kind of supports NASDAQ going lower. You may see that flush out. It may flush on down, and then we embark on that 385 target. If we hold it. If we don't hold it, we could come back and retest the breakout back here, 206. It'd be a more violent correction here on Google. I like the GOOGL ticker over the GOOG ticker. This is the Class A shares, and they tend to produce trades that are more reliable than GOOG. I don't know, for whatever reason, more people trade GOOG, and the patterns don't always complete. The statistics are just slightly worse on GOOG. So I use GOOGL. And Meta, nothing changed here. We're just on a correction. As long as we're holding here above 650, still set to go higher. Microsoft, still hunting a bottom here. If, this is starting to push down into the point where we're probably going to make a lower low. Looks like it's not quite complete yet. This action, and if we get softness in the NASDAQ, probably going to push on down. This could even break the pattern and go lower low than back here if we see a bigger flush out going. NVIDIA still holding. Look at this. It's just, despite all the hype, it's like it it's going to sleep. It's just doing what it needs to do to frustrate the most number of traders. Not breaking out, not breaking down, not even doing anything, just consolidating in between this support and resistance. So we got support at the roadmap line, we got resistance at that 618 at 195, and then we got support at this breakout from last year at 150. And if we can push below the roadmap line, we'll probably come down there quickly, and then that may be support, then we go higher. But if we don't hold that, could be something a little deeper down here around 120. Salah just keeps grinding, baby. Keep working on the dip and rip. There was the dip off of earnings. We're starting to try to confirm the rip, but resistance is up here at 452.50. When we get above that, those highs, that kind of confirms that the bottom should be in place, and we're going on higher. Netflix. There we go. Going on down to the 60 to 70 target. Like I mentioned, 60 to 70 area. That's where we're heading. Right down in here. Not far away. When we broke down right, this bottom of the box, when we broke below it, I mentioned this is going to be what we're going to do. And now that attempt, I was like, fail, rejection. Here we go. Going right down. This is not magic. It's just price action. All right. So I go pull gainers. I go pull things moving 2 hours more up in the pre-market. Put them on the gainers list. I go pull decliners. Try to hunt for some opportunities. And I don't update the list live. So like things that were, and this looks like the list is not the proper list. So let's see if we can try to refresh it. Maybe. Let's see. Hold on. Let me see if this is the same list It is not. Weird. Weird. All right. Well, that's cool. That is the totally wrong list. I'm not even sure what happened. Well, here's the first one, EQIX. I'll just type some of them in. There's the actual list, EQIX. Popping. This big pullback. Set to go up to 1,043. Let's see. ELI. Maybe I'll just make a new list real quick. Let's see. Or just throw it on the bottom here. Let's see. I just need to make a new list. Let's make a new, not open list. List. There we go. And there we go. This is looking better. SanDisk. Probably going on up. 876. 1142 above that. Korea, I've been talking about. This is an opportunity. Get a piece of memory producers, since MU is not going to be doing consumer memory anymore. Zebra, downtrend. I would be careful here. This can develop into more downside. Now, the correction here, this is a trend. A, B, C, pullback, find resistance here, and then resume the trend. So, cautionary. MU, not going to sell consumer memory, but still rock and rolling. Next fib line up, like 893. HubSpot. I don't know that that's the low. Sphere. Rock and roll. These ones, I'm a trend pullback continuation trader. So if it doesn't have like a trend pullback continuation, like Be careful. Crocs, despite the little bump here today, probably set for making a lower low than that low back over here. WDC. Yeah, like this chart right here. There's no pullbacks. It's just rip. And rips like that usually end poorly at some point. It's just part of the game. It's, the big rip and then some chop and then bring it all the way back down. It's a bubble pattern. Bubble pattern is what I call it. We get these super exciting rips. Everybody's going to be rich. We're all geniuses. And then it teaches everybody a lesson. We do bubble, like humans just love to do this pattern. So be careful. You see it on several things. People love to go after the things that are hyped up and hot in the market. It's like, so the economy, when prices are high and everything's hyped up on something, people are like, do I really need to pay extra for that Beanie Baby? And then, but in stocks, when things are ripping and breaking out, like WDC and light, people are like, oh man, I don't want to miss out on the next 100 points higher. This is, so it's a different psychology, right? You don't look at that and go, that's kind of expensive. Maybe I shouldn't buy it. You look at it and you go, oh man, look at that chart. It's ripping all-time highs. I need to get a piece of that before, it goes on up another 100 points. And hence the market cycle bubble. We get these big rips. Where's the top? I don't know. But when it does happen, it teaches everybody a lesson. So be careful out there. G Veranova breaking on higher. 861, 920, 1000. TER is on a tear. 432, 558. CIN. I expect to see a rotation out of some of the stuff that's not correcting. I just do. $173, 220 on that one. AVAV has not been able to get its crap back together here. Race coming up into the roadmap line. Watch for resistance. The top 20% of earners is responsible for 59% of all the purchases. So the top 1% is still doing good. Still doing good. Stocks are still going up. So Ferraris can go up again. But I'd watch out. If we bounce off that roadmap line, the correction can get deeper down to 300. TSM hitting the head on the next fib line. Next one above that, 436, 522. DoorDash coming on down to the targets. Despite their diversification in their business, still looks like we're going on down. And SMH just continuing to push higher. ADI, let's check on AMD. I never took a position yet, but I kind of want to see this secondary test. And then that may be my signal. So I need to put an alert. We're about 205. Akame. Ooh, nice. So this has the potential to rock and roll back up to 141. Onto ONTO. This has potential to rock and roll up to 275. Bloom Energy. Played out. Watch for the retrace. VST. Whole different story than VRT. Vistra just keeps grinding lower. We're gonna have to break above the downtrend highs here to get some up action going. Trend lines are the most subjective and least reliable form of technical analysis, but give you a good place to start. Cloud flare. If we can get it back above the 216, 277 up there. GRN. I do not like the sideways chop of that. Nope. Q. No roadmap line, no nothing. The XYZ just shopping around. Be careful here. People are like, oh, this is a way to get SpaceX equity. Except it's 10 times the NAV. So if we come back and reprice the NAV, this could be back down here. Pretty easy. That's weird. How did NVIDIA get down there? Oh, NVIDIA twice. I gotcha. Gotcha. Different list. VRT. Golly, look at that pop. Holy bananas. ALB. So this one should be set to break on out and go rocking and rolling higher. My targets are up here for... Been waiting for this correction to play out in full. It went a little deeper than I planned, but now the future would be a pop up here. Pull this on over. Been waiting for that pop for a long time, so looks to be good for it. AstraZeneca. MT. Oof. Yeah. All right. Let's clear that list and flip back to this one. I have some setups down here that I brought with me. Yeah, these are the right. This is the right ones. So don't like that one. Downtrend. This one, small bounce. Here's the high, here's the low. 35 targets. Didn't trigger the algorithm. Not great risk reward. Here's the high, here's the low. Entry 166.86, 37.86, 3.8. This is a pretty sweet one. Pretty sweet. Doesn't have a bigger uptrend, but this doesn't need to play out to a bigger higher high. So this one could work out. And we do a retrace and then continuation again. MUR. Another nice one right there. This does have an uptrend going. Uptrend, pullback, potential continuation, 36, 48, 91. Look at that. That is a solid play right there. 92, almost 92% of the time, this hits the target and it has a healthy profit factor. So this is a good one right there. Really good one. This one trends, long history, 30 trades is kind of you need 30 trades. You need to have 30 trades for statistical population, and that's got it. So this 91%, that's statistically valid. This thing trends, pullbacks, and continues. Trend, pullback, continue. Trend, pullback, continue. 36 would be the target. MXL. This is already in it from back here. The target is up there at 20. Secondary bounce. Missed the target. Just a few pennies right there. NRG. There was the high. Here was the low. Here's the potential entry in 185.58. PLMR. Palomar. Here's the high. Here's the low. Entry. We're pulling back though. Better risk reward. 142 target. 6 trades. 83. These statistics don't mean anything. You can flip a coin 6 times and get heads 5 out of 6 times. Not too difficult. Need 30 right here to mean anything. RL. Rock and roll. Here's the high. Here's the low. 389 target. 25.48. Negative profit factor. Maybe not the strongest one. SRE. Wow, I got a bunch of stuff drawn on this one. And the last one stopped out on a crazy bounce. Entry here, 96.79 targets, 55.81. The losses churn up the gains on this one, but it does go on to hit the profit target 80% of the time. So be careful on that one. As far as gamma goes, let's go check that out, see what my expectation here. And jump down on spot. So that was yesterday. We actually climbed up a little bit. So ended up less bearish than I kind of expected based on the gamma charts. So let's see what we got today. Let's see if that loaded. Dang, man. All my crap around. Love this. Don't love this. All right. Where is the gamma chart? There it is. Here it is. I have a bunch of stuff on tabs all over the place. And SPY. Ooh. Yeah, the bubble firming up pretty well today. So we're down to 389. Probably up to, stay at 700, 389. That's the right day. You're up 12th. 389 and 700. So let's put this at 700. Put this at 389, 689 on the downside. And levels, pop this up. Do it over here. Today's the 12th. Tomorrow's the 13th. The Friday expiration. The big one is out here on the 20th. Wow, there we go. That looks better. And we're going to say somewhere around, let's go 693 today. I may not get it right, but that's where it looks like we might hang out most of the day. Which, coincidentally, that's where we've been hanging out for kind of like 3 days. What's up, QQQ? Check her out. Check it out now. Funk Soul. And it ended up being a little more bullish than I thought yesterday. I was expecting a little more bearishness based on the option flow. Let's see. Let's pull this over. Go back to heat map. Pull up the Qs. There's no bubble. There's nothing here. Like, geez. This is dangerous. Holy Nikes. So there's no bubble. Hmm. That's weird. Weird, weird, weird. All right. Gotta make a educated wild guess. So we're gonna go with 618 and 605. Big range. 618, basically where it is. And 605 is slightly below where it is. We might see this drop on outs. Let's see what the options levels say. Zoom out, zoom back in. Where can we screw everybody? 608. 608, 609 maybe. 60, let's go 60. Come on. No, stop moving the things I don't want to move. 608. This we got down pressure on Qs. SPY looks kind of benign, but we got down pressure on Qs. Alert on R. What did I set on R? I don't even remember why I set alert on R. No idea what I was. I don't remember why I set an alert on R. Whatever. And so that's that was the Qs. Kind of the expectation down here. And we'll see if we can hold the bottom down at 605. If you're gonna play NDX today, watch the bubble, because if the bubble starts expanding lower, this could get away from us quickly. There's just no big levels hardly at all. Somebody just dumped a big chunk of 611 put, so that may actually keep us floated up here at 611 now. That's possible. That's why it's hard to go at it very early. And now more got played. So I'm gonna stick with the 608. And this keeps bouncing around, changing. So it changes constantly. So this is not a fixed thing. It changes as the day plays, because the 0-day options get played all day. So this is not like anybody that tells you can just use the levels and figure it out. I think they're full of crap. If you use the chart, this still aggregates all the options that are available. And I mean, if you could just switch it to one expiration, that expiration has the most weight. And that's why I think the heat map works better. But there's just no big levels today on Qs. So that opens it up for a little bit of chaos potential. I tried to type SPY, but I didn't double type that. So when you look at SPY and you'd be like, pull up SPX, it doesn't have all the expirations. So these levels are at least bigger, but if this level sitting out here on Friday has me concerned, though, that this is down pressure for SPY also. So we have an up potential path. We also have this down potential path. We've only got one day to do it, so yikes. And then we just pop. So it's kind of a coin flip. Do we push a little higher? Do we push a little lower? This is why I say the map constantly changes, and it changes a lot in the first hour. Then it starts firming up for the day. But as price runs around, especially on a big mover day, then these levels change very quickly. It's kind of reading the tea leaves of the market there. So hopefully that helped. Not sure I trust that one today. This one, made my pick here. You can kind of potentially iron condor it up, but I don't know. Maybe. All right. That's the play for today. Expectation, bigger picture. We still have that down pressure cooking here for a deeper correction. This is still down on highs. We have the S&P is kind of like this coin flip situation where we've set up the potential to break out, go on higher to 7,030, but this lower highs situation and the way this is chopping around has the potential to flush on down again. And then NASDAQ just looks bearish. Like we're not even near the all-time high, relatively. We're in this correction and it needs another flush to finish it up. And look, 1, 2, 3, 4, and this could be the 5. That'd be the A, the B, and the C. That's what we got cooking. Ah, man, man. All right. That's it. I'll be on Market Masters 11:30. We'll go through the wheel strategy and how we may turn that into cash flow. If you've not seen this before, this is my 50K challenge account right here. I'm up all-time $66,000 for the last year, basically. I funded this account April with about $75,000. It's had money put in. It's had money taken out. I don't know what the, what's your starting stake? What have you put into it? I'm not sure right now because I've used it to pay bills and all sorts of stuff. But I do know the profit on the account and the profit loss curve looks like this. I just keep consistently making money up to getting close to breaking through 70,000. You see, I traded in there yesterday while I was on the road. Traded the day before. Traded the day before. Just little gains. So hopefully the guru you follow shows you this. If not, what are they doing? What are they actually doing? All these trades are verified, uploaded every day. I don't hide any. I can't hide anything. Every trade I do in the account, uploaded, verified, right there for you. Links in the description if you want to check that out. Have a great day, everybody. I'll see you later.